Okay, guys, welcome back. Let's get right into the charts. Take a look at what we got going on. A couple trades are working. A couple trades are actually triggering right now, so I want to point those out. And then there's a few that aren't quite working as well, so we want to point those out as well. Again, full disclosure, I point out what I see. I take trades. I talk about the trades that I'm taking, and we can talk about the winners and the losers. That's all part of the process. And also, it's important to know position sizing is important. So, I typically take about the same amount when I take a trade on each position, unless it's a higher volatility stock, such as like a penny stock. I don't trade the penny stocks too often, but if it's a mania stock or something like that, then I'll take a smaller position size on those, because those, if something's really running up 20%, down 20%, you don't need as large of a position size. All right, let's get into the Qs. Here's what we got going on. All right, so the only thing on the Qs, bearish rising wedge. This is coming off the March 2020 lows right there. And we've got just this upward trend. Now, I'm not too concerned about the upper trend line. I'm waiting for a sell signal of a break of this lower trend line. So if we come down to here, hang out. But I'm ultimately waiting for that breakdown of this trend line for the next sell signal on the Qs. Until we get that, I don't trust this. We already had one false breakdown, which was right here. This was the bear trap. And, I want to see another impulsive breakdown to get us down there. SPY. Okay, SPY to me looks like it's going to roll over here. And I've been talking about this level where we're at. This is a really key. We're in just heavy resistance right now. So we have 2 points of resistance I want to point out on SPY. First, we're coming off the March 2020 lows. And we've got this trend line. We marked it here. A little bit of undercut, but for the most part it held. Right here it held here. Then we broke. All right, so we broke that resistance, or that support, sorry, and did a back test. And then you can see recently we just came up and we've just basically been trending along this trend line from pretty much from underneath. They made it look like they were going to recover it, but for the most part it's from underneath. So we're still hanging out. That's resistance. The other resistance is you have to go on the weekly chart and go all the way back to the 2009 lows on the weekly. You can see we held support here, support all through here. So trending, we were holding that trend line for many years. And then we broke in 2018. We broke. It was resistance all through here. And then we did a full back test, resistance right through here. COVID drop. Came up, and you can see right where we're at right now. So far, holding resistance. Okay, so again, this is on a weekly chart, so you still have a few more days, but the point that I'm trying to make is we're in heavy resistance. This is the area where I think it's likely we get rejected. However, we're so close, we could easily pop it just a little bit, make it, run some stops, and then reject. That's possible too, so you got to keep an eye out for that. Gold's selling off some more today, kind of impulsively breaking down. Again, I just don't see anything bullish in gold yet. I'm starting to get interested in the miners, but I think gold bullion's got to make a quick visit below that 17. It's about 1775 area. We run down and make a quick visit underneath there, and we do it anytime soon. We will have bullish divergence, so that will be it will be a divergent low if we get down there sometime soon. And that's what I'm looking for, is that bullish divergence on gold. That should set up nicely for putting in kind of a bottom on this on gold, and then we'll probably start to look for higher prices. Let's take a look at the DXY. You can see it's still kind of hanging out here, just basing. So I don't know. Maybe we go higher. Right now we have this upward channel that was broken, so it looks like it wants to go down, but we could come back in for a back test. Or, obviously, what I'd be looking for, if they break above this and come back in here, again, above 92, there's probably some serious problems are gonna happen as the dollar just gets too strong. Otherwise, we could continue to just run up, do a back test, drift lower. I don't see anything in the dollar as of right now on the hourly chart. If I look at the daily, The daily, we had bullish divergence right in here. I have it circled. So that signals that we're going to have a trend change. We did start to get that trend change start to move up. And, again, we could just be basing here before we, continue higher. All right, let's take a look at Apple. Apple's at a key level. If we break, then we're going to start to see a sell-off likely in the market. So pointing out on the daily, let's go ahead and get rid of this trend line here. We don't need this one. So Apple coming off of the July kind of time frame, you can see on the daily we've just been walking up this trend line, and we're right there, right at support. So this is where the buyers should step in. If Apple breaks and we get, and we break this trend line, then that's a sell signal in Apple. Apple also has negative divergence. You can see it's been extending for a while. This recent high, which was the high that came after earnings, was a false breakout. And if we get that breakdown, then that is going to be confirmed as a false breakout. So divergent high right in that area, negative divergence here on the RSI and the PPO, signaling a trend change is likely. And then the sell signal or trigger would come on a break of this trend line, which we're right at it now. So again, no trigger yet, but it could happen soon. So we're watching that one. Okay, pins. So I pointed out in a video I got short on pins on this day right here. Today they're just gapping it up. Nothing's technically changed on this, so I still think it looks good for a move to the downside, even though it's gapping up today. Coming off the March 2020 lows, you got a nice clean up trend line right there. Broke trend, back test, and kind of another back test. Now pins could run up and do a full back test all the way up to this trend line. That's completely possible. If it does it anytime soon, it's going to be a divergent high. So you can see we have negative divergence. We just extend that out. And that negative divergence is intact. You have an uptrend, you broke trend, and we're just seeing a little bit of a gap up. So I think this gap up is, kind of designed. It was some news that Microsoft months ago thought about buying them. I mean, okay, there's no offer out there. And so, they gap up. And, they've been selling off since they opened the day. So you can see here, you kind of gap up and you're starting to sell off a little more. So again, this could obviously just do back test all the way up, or could just roll over. There's always the opportunity for headline risk. So you never know if Microsoft's going to come out and say, we're going to buy pins. All right. That's always the opportunity. Just the same as there's opportunity when you're long for something to come out and say, we have a problem with this, sales were horrible or whatever. There's always headline risk. So again, that's why position sizing is important. You don't want to have your entire portfolio in a single position because of that headline risk. So obviously that's just a risk you have to be willing to accept. As of right now, the charts tell me that we're just doing a back test. We have negative divergence. We're likely to continue to roll over. Okay, DraftKings looks interesting for a short in this area. And what do I like about it? Well, I've got it circled. So this previous high right here, this was a divergent high. You see the PPO and the RSI, how it made a lower high in this area than the previous high right here. But price was higher, so divergent high. That divergent high failed, and that drop it doesn't look like much, but it actually is a drop of about 40%, 45% or so. And then we, set up for, a move higher. And just the other day, we made a new divergent high. As I zoom in, you can see this high right here was slightly above this previous high. And yet the RSI and the PPO, lower momentum there. So another divergent high. And so then you look for a trend line break. Going to the hourly chart, we've got this kind of basic support here, and we're starting to break. There's your impulsive breakdown so far. So we'll see how that closes the day. I suspect it continues to roll over and probably fills this gap. But again, we'll just need to watch that. Looking at the daily, you can see it's pretty impulsive. So looks like a good sell signal to me right after a divergent high. And again, the last one was good for a 40% drop. We don't know what this one's going to be good for. I suspect, you could probably draw a trend line like here, which would maybe, that's a pretty decent trend line. We got 3 reactions, one there, and then one there. So that sets us up for a drop down to the trend line, which is a drop of about 26% or so. So yeah, I would, I like it. Qualcomm, so the sell signal was really right here back on the 27th. And it did basically uptrend line right there. Nice clean upward channel. We broke that channel right here, and we did a back test. That back test completely failed. So they gapped it way up here. It made it look like it was recovering, but then it sold off and failed. So that was your tell. Now we're getting price action in our, in the direction that the momentum was telling it was going to go. Negative divergence here on the daily. And we're heading down to the nearest, the closest support now, sitting around this 142 area. We'll likely get a bounce there. And we got a gap to fill down here. So another target is right about 130. That's kind of what we're looking at. So far, it's just continuing to work. Okay, Zillow Group. So this one caught me in a bear trap, and it's just, nature of the game. So this one on Zillow, you've got an uptrend line right here off of the April 2020 lows. And we broke trend right here. And we've been back testing, creating a secondary price channel right there. We broke that price channel right here, so that was a sell signal. Looked good. We had negative divergence intact right there. And then they ramped it up for a back test, and then basically gapped it up this morning up, up. It was at one point up about 20% on earnings news. However, you can see where they gapped it to. They gapped it right to that former trend line. And if I go to the hourly, you can see broke it above there, ramped it all the way up here, made it look like it was going to, be breaking out, continuing, and then it started to sell off and has continued to sell off. So we're back below trend line resistance, but we are in an upward price channel, so that's something to realize. This is an upward price channel. We're at trend line resistance. Is this the high water mark in Zillow, right after earnings, and then we're going to sell off? I think that's probable. But again, this was a bear trap. So that, I think, was part of the catalyst for the big move up after earnings. So continuing to watch that. As of right now, because because I'm trapped in it, I don't think it makes sense to get out right here at trend line resistance. I'd like to see it, what it's going to do up here. I'm not adding to the trade. That's one thing I don't do. I don't add to losing trades. For the most part, I'm not going to add to the trade. Now, if we start to break back down and break back below this trend line right here, then I would add to the trade there. So again, just going to continue to watch this one. That's the nature of the game. Sometimes they catch you in a bear trap. Sometimes they get you in a bull trap. That's just how it works. Okay, and we'll wrap up with Etsy here. Etsy's continuing to, it's still within its upward price channel. We're watching this trend line right here. So this is your upward trend line. A break of that's your next sell signal. There is negative divergence on both RSI and the PPO on the daily chart. So I suspect we're going to break that. But until we see that, we'll just wait. But when you get that break, that's my cue to either add to a short or take a short when you get a break of that trend line support. I think I think we're going to get it here relatively soon. It's likely to come in the form of a gap down, but until we see that, we'll just let this continue to do its thing. That's all I got, guys. I'll get it out there. Thank you. Leave me a thumbs up. Catch you guys in the next.